Today, I'll be showing you 10 critical LLC mistakes that could cost you thousands in 2025. As a registered CPA and owner of a tax planning company, Tax Helm, I've identified specific pitfalls that consistently cause problems with taxes, liability protection, and compliance. And that's exactly why I'm making this video today, to show you the 10 LLC mistakes you need to avoid in 2025 to protect your business and save money. All right, let's dive right into it. Number one is not having separate personal and business finances with dedicated business bank accounts. Every time I see a new business owner, this is a problem or a question that comes up. And so the mistake is you're commingling everything. Business expenses are going in the same account as their personal expenses. You're buying kids' clothes next to a hammer for your business. That's the problem that we have. And why is this a big deal? Why is this a mistake? Is because everything is in one place. And if the IRS were ever come in and look at this, they'd say, how do you know what these expenses are for? You're taking this meal as a business deduction. How do you know what that was for? And they're going to really start to scrutinize that and say, okay, we need receipts for all of this stuff. Whereas on the other side, if you have a clean set of books where you have a business account, that anything business runs through that account, income, expenses, everything goes into an account specific to the business, and then personal is completely separate. Now you have clean. Now the IRS is looking at it and say, okay, everything here is clean. It's organized. It helps make sense, and the IRS is likely going to be less on top of it. Now, the other thing to think about too when we're talking about commingling is that sometimes you can miss expenses. You're going through your bookkeeping at the end of the year to get your tax return all prepped, and you're trying to find, okay, what's business in here? And all of a sudden you see a meal there. Maybe it's Buffalo Wild Wings, and you're like, was that business? Was that personal? Hard to tell. So I see so many mistakes happen when we commingle that we miss out on deductions, and not only that, it leads to messiness that could really be heavily scrutinized by the IRS. All right. Number two is forgetting to file annual reports, which could risk administrative dissolution. I talk to a lot of business owners where they're just coming on. We look at their business. We go to the state website, whatever state that site in, and we say, okay, is this business active? And all of a sudden you go on the business site and the business has been dissolved. Why? Because they forgot to file their annual reports. Every state, or most states at least, require on an annual basis that you just file an annual report. That renews it. Usually there's a fee with it. Sometimes it's a pretty small amount. Sometimes it's a little bit larger amount, but depending on the state. But you just go to the state website, you file a report. Basically, they want to know, hey, has the address changed? Is there any ownership change? Anything that just changed that we need to know about? Pay your annual fee and you're good to go. This is not part of your tax return. So if you're filing your tax return, that does not mean that this annual report is automatically getting filed. So make sure that you put something on your calendar every year to check out, did I file my annual report? That makes sure that your business is active at the state level, and this is going to be super important for your business. A third mistake I see is missing LLC designations on business documents and correspondence. So what does this even mean? It means that you're writing a contract, you're Joe Smith LLC, but on your contract, you're just saying, hey, this is with Joe Smith. And you're having agreements over here. You're not putting your LLC on it. What does this lead to? This leads to that the agreement isn't actually with your business. And so in a potential lawsuit or different issues that might come up, there could be some issues there because they're saying, hey, I know you have this LLC, but you're not even acting like an LLC. You have all these agreements, all these relationships, all these things through you personally, but on those agreements, your LLC is never mentioned. So make sure that once you set this LLC up, operate under it. When you fill out a W-9, make sure that LLC is filled out. When you're making agreements, make sure it's made out to the LLC. Now, obviously, you're going to be signing on behalf of that LLC, but just make sure that you have those LLCs and everything recorded properly on that piece. The number 4 mistake that I see is opening an LLC in another state with no foreign designation. I don't know how many times people come to me and they say, well, I heard I need to open up a Wyoming LLC, or I heard I need to open up a Delaware LLC. And while in some certain but rare instances, it does make sense to open up an LLC in another state, most of the time, you just want to open up an LLC in the state you operate out of. Because the one thing that they miss, and they say, well, I'm going to open up an LLC in Florida because there's no state tax in Florida, but I'm going to operate here. And let's say you're in Wisconsin like me. I'm going to operate this LLC in Wisconsin, but I'm going to open it in Florida. I don't have to pay state tax and I don't report anything to Wisconsin. Wrong. As part of that, if you have an LLC in Florida and you're operating that business out of Wisconsin, you need to file a foreign LLC election in Wisconsin to be able to operate out there, and you're still going to be paying Wisconsin taxes. So you might, for legal purposes, say, I'm going to form an LLC in Delaware. Again, most cases, not necessary. Some cases it might be. Most cases, It's probably not. But let's say that you do that. You form that LLC in Delaware or Florida or Nevada or Wyoming or wherever it might be. You need to also create a foreign LLC or submit the documents to create a foreign LLC in the state that you're actually operating out of. So if you think that you can just get away from paying state taxes by filing an LLC in a different state, you're wrong. Make sure you understand this topic. And if you did happen to go down that path, make sure you fix it now. Start that foreign election in the state that you're operating out of. Now, since I can only cover the mistakes here in so much detail, I don't want you to leave this video and fall into what I call the generalized content trap, where you become so wrapped up in generalized advice on YouTube and other platforms that you never actually take action. And this is exactly why I want to offer you an entirely free demo call, where we'll look at your exact situation and help you come up with a game plan for your taxes. Click the link below to book your demo call. All right, now back to the video. Item number 5 mistake that I see is neglecting to maintain detailed meeting minutes and operating records. You know, when you open up an LLC, it isn't just submitting the documents at the state level for an LLC and all of a sudden, boom, you have an LLC. Yes, you have an LLC open, but you need to do things on a regular basis to maintain that, to keep that LLC safe. You need to have an annual meeting where you have meeting minutes that associate what was discussed at that meeting. You need to have an operating agreement. So talk to your attorney about these different things that you need to do. But not only that, this meeting minutes, this annual meeting minutes, maybe it's monthly, quarterly, annually, whatever it is, not only is that just helpful to help keep your business in a good standing, but it also creates some awesome opportunities for tax deductions. Because now you have a board, you set up a board for your LLC, and now you're having meetings on a monthly basis and a quarterly basis and annual business. Well, guess what? Those meetings, whoever might be on your board, might be family members, might be friends, might be close colleagues, and now you're meeting with them on a regular basis. And guess what happens at meetings? You eat, you drink, you go places, you do fun things at these meetings that you're talking about your business. And guess what? When it's a board meeting, those become tax deductible. Now we need to be reasonable and make sure we're doing dotting our I's, crossing our T's and all these different things. But not only does this help keep your LLC in good standing, it also creates a great tax opportunity as well. So that's a mistake that I see people doing. They're not doing meeting minutes. They're not updating their operating records when things changes, when things maintain. Item number 6 mistake that I see is making business decisions without consulting all LLC members. So when you have an LLC, you're going to have an operating agreement, and that operating agreement is going to tell you, who's making decisions, who's responsible for these different things. And as a business, I think it's just important to involve all of the owners in decision making. And, I see so many times where one owner goes rogue and he goes, I'm going to do this, this, and this without even talking to the other owner. And especially if they're both in the operations, that is a quick route to having that LLC dissolve, to having a partnership breakup. And they say the hardest ship to keep afloat is a partnership. So dot your I's, cross your T's, do some legwork up front, talk to your attorney to design that agreement to make sure that everyone's on the same page, because we want your partnerships to last forever. We want these things to grow. We want these things to succeed. We want these things to create massive success for you. But you got to dot your I's and cross your T's because, I know as a business owner, you're so excited to just dive into that business and start making money and start doing things. But you don't want to skip out on these items that we're talking about today. We want to make sure that we're doing them correctly to protect you, to protect your partners, and to protect your business in the event that there's a disagreement, which there will be. But if you have things set up properly, that disagreement can quickly become, okay, here's how we handle those things. We get past it, we move forward, and we continue to grow our business. But have those things in place before you just hit the ground running. And I know it can be so hard to slow down and put these things in place, but you're going to thank me later in year 1, year 2, year 3, when some of these things pop up, and now you have items that you can think about. The 7th mistake I want to talk about, and this kind of goes along with number 1 too, but it's mixing personal expenses with business funds for tax deductions. And so this is, again, that concept of if you have your expenses separate, make sure you stick to that. And if you accidentally pay for something personal out of the business, mark it as an owner's draw to you as the owner. If you accidentally pay for something business related that's on your personal account, so you pay for something business related on your personal account, make a reimbursement, set up an accountable plan, have these processes in place to make sure that we're doing that. Now, of course, if it's 100% business related, we always want to run that through the business. But sometimes mistakes are going to happen, and just make sure that they're recorded properly. Because if a mistake happens and we record it properly, we're in the clear. And the IRS is going to say, oh, okay, that's a rare instance. But if these are continuing to happen regularly, set some processes in place so that okay, business expense, this is the card I use. This is the checkbook I use. Personal expense, that's the card I use. That's the checkbook I use. Set some processes in place to make sure you don't fall down that trap. And again, the problem with commingling is not only can it make the IRS put a little bit more of a magnifying glass on your business, but also you're oftentimes missing out on expenses that would be valid business deductions that you're not taking advantage of. Or you're taking expenses that you shouldn't be, and that is immediately going to be a red flag for the IRS. The number 8 mistake that we see is failing to obtain necessary business licenses and permits. So when you operate a business, you need to look at, okay, what type of business am I operating? And is there any license or permit that I need to do to operate that business? Now, some businesses, you just hit the ground running. You don't need to do any of those things, but you want to look into those things as you're first starting out your business, because guess what? Owning a business is great. And I highly encourage so many people I talk to, let's start a business of some sort, even if it's just on the side to start with. But we want to make sure we're doing it right. We want to make sure that we're setting this thing up for success. So make sure you do some research. What business licenses are required potentially in your state, in your locality for your type of business, and just make sure you're dotting your I's, crossing your T's, getting those things done. The number 9 mistake, and this is a big one, is skipping professional liability insurance coverage for your LLC. I talk to a lot of business owners that say, I don't need insurance because I got an LLC. Well, what happens if your LLC gets sued? What happens if something comes up there? What happens if you make a mistake? Well, now your whole business could go gone from one mistake, one accident that your team did, that you did, that something happened in your business. By having professional liability insurance, it helps cover you in the event of these mistakes. Sometimes this might be E&O insurance, sometimes it might be liability insurance, whatever it might be. Always talk to an insurance agent when you're starting a new business to say, okay, what insurance do I need for this business? You want to be protected because sure, the LLC provides some protection if you're doing things correctly, and talk to your attorney about what things you need to do correctly. LLC can provide protection from you personally, but insurance can provide extra protection within your business. Let's say you have a massively growing business. And I know when you first start your business, you don't know where it's going to go. But guess what? Businesses grow fast. And I've seen so many people that just grow, but they still think that, oh, I'm just a small business making $10,000 a year. Now they're making $300,000 a year. And one little mistake could erase that entire business if you don't have the right insurance set up. So talk to your insurance professional, tell them what you got going on, and ask them what they recommend for the best protection for your business, and get that insurance done right away. Especially when you're small, that policy can be very cheap. These policies are not super expensive depending on your line of work. So make sure you do it regardless of your size to help protect yourself. Finally, number 10 is not updating your registered agent information when you change business addresses, not updating this information. And this happens all the time. This happens in all parts of our life. You know, I was talking to my wife the other day, and we moved a couple years ago, and her driver's license is still in the wrong address. So this happens all the time, but just make note that whenever major changes happen to your business, you have a new business partner, you lose a business partner, you change your address, you have a new registered agent, you have a new manager, you have a new member, whatever it is, just make sure that if those things are happening in the background, I also need to update this with the state. I also potentially need to update this with the IRS. Make note of that so that when these changes occur, you're going to those respective places, making those updates so that everything is clean from a state level, from the federal level, in all those different items. So now that you've seen the critical LLC mistakes to watch out for in 2025, what concerns me most in my tax practice is how these errors can seriously impact your business's financial and legal protection. You know, through years of business planning, I've discovered that successful LLC operation isn't just about formation. It's about ongoing maintenance and strategic decisions. The most protected business owners I work with aren't just checking boxes. They're actively managing their LLC structure for maximum benefit from a legal and a tax standpoint. And if you want me to analyze your tax plan and help you avoid these costly mistakes, click the first link in the description and book a complimentary demo call. I'll see you on the next one.